All right, good afternoon, folks. This is Ferris with Trade with Tex, and today we're going to be talking a little bit about some of the charts that I'm looking at going into the upcoming week. So every Sunday I try to put out one of these videos where we talk about different chart setups. Keep in mind that these aren't really focused on the educational side of things. We do have a lot of educational videos on the channel, so feel free to check it out. Feel free to subscribe if you like the video as well. And share it with other traders, okay? Now, only other thing I'll mention before we get into it, we do have a free trial for the Trade with Tex membership. It's normally $50 a month, so it's not even that much, but we have live audio, screen share, and a chat room for anybody who is looking to take their trading to the next level, okay? With a lot of experienced traders. So that being said, we're gonna jump into it. Whether or not you're signing up for the trial, whether or not you're subscribed to the channel, we still got some money to make here. Okay, so first things first, the S&P floated to a new all-time high last week, and we're going to kick it off with the S&P as usual, but I do have some higher momentum and higher risk to reward names to take a look at as well. Okay, so the S&P kind of just moved up on air to a new all-time high. This is the daily chart in Thinkorswim, so the 1 year, 1 day. It's the main time frame we're going to be using. And as you can see, we had very, very low volume for the majority of the week, which actually made it pretty tough to trade. I know it's usually easier to trade in a green market, but if you didn't really take as many trades last week, if you got stopped out a lot, that was the case. But if you stuck by the computer, there were still opportunities, okay? So it's tougher for day traders. It's tougher for swing traders because you're not really getting a good deal in terms of risk to reward. So it was definitely a more difficult week. Now, going into next week, we are expecting volume to pick up a little bit. We're expecting the action to be a little bit less choppy because it really can't get much worse than that, to be honest. But here's some of the targets I'm looking at and key levels for the S&P. So I'm going to switch it over to the futures chart here to give you a better idea. And you can still see the low volume on this chart too, right? I have a moving average on this. It's well below the moving average, okay? But we had a big push on Monday, then consolidation, and a big push through Thursday and Friday, okay? And a very aggressive close on Friday. You can see it here on the 5-minute, right? Huge rip into the close. We capitalized on that with Apple calls, but bottom line, we really did not break down out of the trend at all. And that's the difference between this market and what we had 3-4 weeks ago. And that's the first thing I want to touch on. There is very clearly a strong trend here. Yes, we're overextended, but it's just like that old Warren Buffett quote, the markets can stay overbought or oversold longer than you could stay solvent, right? So for this specific push, we did melt through all 4 of the targets that we had. Sorry, all 3 of the targets that we had for the next couple weeks. That's here, here, and here. And the next target overhead, just to give you an idea, is 4145.25. Okay. So it would be this level up here. Now that doesn't seem like that bold of a call, but after that rip on Friday, I think that is still pretty realistic that we hit that within the next week, okay? So 4145.25, and then after that, I have to zoom out even further so you guys can see it. And we're just using basic fibs here, 4160 if we round that level, okay? So the only issue I have with next week's targets, and this was the issue with swing trading, risk to reward is not as good because the targets for this past week were about 30 points apart, right? Now you can see they're about 15 points apart. So because we're getting more overextended, these targets are tightening up and getting closer to the price, all right? So those are the levels we're looking for overhead to hit within the upcoming week. For support levels, I'm gonna switch this up to the hourly or 60-minute, whatever you want to call it, to give you an idea. We have a couple of zones here, but the first thing I wanted to point out is that because we have such a strong trend, we have to trade this differently, right? We have to make sure we get a good discount before we jump in. We can't just chase these moves up unless we're playing with a smaller size, right? So in this case for the S&P, one of the big things that played out this week was just basic moving average analysis to get good entry points. On Friday, we did not short, and this will be good to know going into next week too. If you follow me on Twitter at Trade with Tex, I was tweeting this out all day too. But if we defend one of these key hourly moving averages early on in the day, so either the 20 hourly SMA, well, EMA technically, since we got the Keltner channels up, or the 50 hourly SMA, Okay, if we defend either of those within the first 2 hours of the trading day, do not short. Okay, so this is more so along the lines of what to expect next week, right? Retrace to those moving averages and we do it again. Okay, retrace to those moving averages and we do it again. So we got that on Friday. You can see we got the clean bounce off the 50 hourly SMA. Those are support levels that you're going to have to check regularly throughout the day. Okay, but bottom line, these are the two targets overhead. These are the two nearest support levels. And below that, the next one is 40.69. Okay, so let me show you what that looks like on the daily chart, and we'll move into some of the momentum tickers here. So target 1, target 2 is even a little bit out of view. It's right up there. And then support, and that's about it, right? We do have support a little bit lower than that, but I don't want to plot out too many levels to overcomplicate this. Okay. So nice and simple, the S&P melted through 3 targets this week. Don't expect that kind of momentum next week, but expect a little bit more volume with some of the bigger names. Okay. And I will say, just in terms of groups, a couple of groups that you should be looking at going into next week, and we'll elaborate on it briefly at the end of this too. But a couple of the groups, XLK, right, for tech. Oh, not XLX. XLK for tech names, right? Really, really strong last week, still strong going into the next week, okay? XLV healthcare still looks very strong. And I would actually steer clear of energy plays. I know that's just kind of a brief side note, but there's still so much buzz for like Exxon and Chevron and all these other companies. The charts really are mediocre and they're not telling us anything because volume dropped off. So I know this kind of seems like a random mention, but don't waste your time on the charts that look like this. Look at the ones that actually have a decent trend to them and are trying to or are breaking out. Okay, you can see XLV healthcare ETF, clean breakout. And the way that you make money off of this is not just with the ETFs. You look at the group, it's called the top-down method of analysis. A lot of fund managers, or if you guys have ever had a job with wealth management, you know that this is how they evaluate stocks, right? They look at the outperforming sectors, groups, whatever, and then they pick their favorite stock and trade that one, okay? So this is me telling you, pick your favorite tech name, pick your favorite healthcare name, and add those to your watch list for next week, okay? Because even if tech pulls back a little bit, it's ranging really well. All right. Now, we put a solid 7-8 minutes into that, but that was a pretty important discussion with the S&P. We're going to move into the more exciting part of this, which is the momentum names. All right. So first things first, TIGR. One of those stocks that, you might want to avoid it as much as possible, but it just keeps coming back on the watch list, man. This thing is relentless. So TIGR, let's talk about the cons first, right? Because you look at this chart, you may or may not be able to see the pros, but this is one of the growth names that just got way too popular on the way up, pulled back very hard, and that's actually a con, because technically, while I do love this stock, it is a bag holder stock now, right? Meaning it's more likely to sell into pops. The other con that you have to be aware of, the other downside, is that it's going on to day 3 now. So this is something that very well could give us a break Monday, Tuesday, and then come back to life Wednesday, Thursday, Friday. And I know with these videos, they're usually watched by people that are kind of looking for guidance or have trouble scanning. And I feel like you guys are going to lose track of this one. So do not lose track of this one. It's breaking out over its previous swing high. So that's the first mention here. It's breaking out over that previous swing high. You might be saying, Ferris, it's barely holding that, but it's closing well above the previous highest close since earnings. Okay, closing prices tell us supply and demand clearly, right? Sellers are drying up a little bit and buyers are taking back control. The other level it's closing above here is the 20 EMA, which if you guys have watched, a few videos on the channel, you know that we use these EMAs, we use the Keltner channels day in and day out. And basically when we cross over this blue line, we're signaling a move up to this dotted yellow line. And the reason why that's so meaningful for this stock, that's a lot of upside, right? So a lot of reward. And that's where all of the levels are aligning, right? Around 22, 22.50. So for TIGR, it's crossing over, it's breaking out. The only issue that could give us a small pullback on Monday before this thing starts going up is that it's bumping into a key fib at 20.27. See this blue line here? It's yellow because I have an alert set above it because I'm ready to play the breakout. Okay, so TIGR, the game plan here, as long as it stays above 1850, which is the 20 EMA, we're looking for a push through 20.27 to 22 bucks. Okay, nice and simple. So TIGR, it's going on day 3. If it needs a day to catch its breath on Monday, let it breathe, and then we'll take it for either a swing trade or a day trade up to the 22s. Okay, nice risk to reward on this name too. It's not your standard, chase it up stock. It's a bouncer. Okay, so looking for about 10% upside here on TIGR. All right, second ticker is Tesla, which I'm probably just going to get absolutely skewered here for going after this one, but Tesla still looks pretty promising, and I don't even like this company. You guys know I'm not a huge fan of its valuation, but out of all the stocks that have really underperformed lately and haven't sold off on high volume, right? There's barely any volume here, which usually precedes a larger move, right? Out of all the stocks, Tesla is one of the few that's holding up above its key levels, right? And it has a couple of short-term catalysts. So really, with this one, you just got to be patient, okay? But I think this is going to be its week, depending on the overall NASDAQ movement. But bottom line for Tesla, there are 2 areas that it's defending, and there are 2 targets overhead. So the areas that it's defending, one of which is the 8 EMA on the daily. Now, this isn't all that significant. It's the purple line. It's not all that significant because it doesn't have a strong trend, right? Normally, we care more about the 8 EMA when we have a trend behind this because then it acts as support, right? But more specifically in this scenario, it's significant because we're crossing the 8 above the 20, which has not happened in the longest time, right? It hasn't happened since the all-time high. So it's the same case with TIGR. This is the reason it stayed on our watch list on Friday, even though it opened up looking like garbage, because this is the first time it's crossing above the 20 since the all-time high, right? So we're not looking at overextended names. We're mainly looking at stocks that have more upside because they're doing something different with regards to the trend. Okay, they're shifting that trend. So Tesla, another example of that, 8's crossing above the 20 and it's holding above the 8. So short-term trend analysis is still bullish, right? Despite this mediocre action here. And then on top of all that, it's got a lot of support about 675 and some change and then 674. So this daily chart doesn't look that significant, but if you look at the weekly time frame, right? Last week's candle ended up closing above that level, and it hasn't been able to close above that in a month. All right? So Tesla, what this is telling us, this is a nice support zone for a bounce back up. If it cracks, right? Let's play worst case scenario here. The no-brainer buy zone is 656.5, just to give you an idea. So let's say this cracks and we don't get the setup we want. That's the level you wait for. Okay, and that's a no-brainer. Got to take a position there if it dumps down to that level. Okay, but assuming it holds, assuming everything goes well, the overhead targets, and I'm going to be a little bit ambitious here, 704.96, so basically 705, and then 717.85. All right, and we got a lot of overlapping levels there. For Tesla, we have the 50 daily SMA, we have the upper Celt. So this is the big target, but you have to take profits there if it gets there. All right. So Tesla, kind of the calm before the storm here. It's got minimum 30 points of upside, and it's got about 20 points of maximum downside. So the risk reward, not perfect, but if it bounces off of 675, it's looking great. All right. And so far, so good. It is. Okay. So that's the game plan here. Tesla for a move up into the low to mid 700s. All right. Last ticker here, and I'll mention a couple of long-term plays very briefly at the end as well. But last ticker here is a small cap ITRM. This one had a weak Friday candle. The reasoning behind it, and those of you who are in the Trade with Tex chat, you're already aware of this game plan, but I want to make sure I get it out there for everybody on YouTube. The reason the stock sold off is because the FDA requested more time to review their new drug application, right? So ITRM dumped down a quick 20%, roughly, all the way down to one of the two significant support levels. So what we have here is a pretty unique scenario, because that's a very small negative for ITRM. That's not a, game over, we've rejected this application, right? Could be as simple as the FDA being inefficient, okay? But basically, great risk to reward here if it defends 128. And if it doesn't, let's say we get stopped out and it doesn't bounce back, this is just like Tesla, where there's a no-brainer bounce zone down here at 110, okay? So whether you trade large caps or penny stocks, whatever, the technicals still apply. ITRM has some bounce potential to 146. That's the first fib overhead. Just keep in mind that we have Friday's high under that, I think at 142. Okay, so if you do play a bounce, there's about 10% of upside here. And then there's about 3-4% of risk. That's a perfect ratio. Okay, and again, if it cracks, there's a no-brainer buy zone at 110. That is kind of just the line here, right? We always talk about the line in the videos. What would really crash this stock? It's 110. And bulls are definitely going to step in at that level if it hits. Okay. So ITRM target area 142 to 146, and that's a pretty modest one, right? We're being a little bit nice there. And then the support's 128 and 110. All right. Like this one for a potential bounce. And again, you can tell that we're focused on higher risk to reward names here. We're not just chasing up the tech names from last week. Okay. Last thing I wanted to mention in the video, a couple of potential long-term breakouts. Roblox, one to keep an eye on. Everybody's aware of this one now, right? I've been drinking the Kool-Aid since day one, but we loaded it up in the 62s. And currently it jumped up to 74. You can see I got my alert set above that key fib. But the bottom line for Roblox is that this is the highest weekly close ever for the IPO. Okay. So potential long-term breakout. Unfortunately, with IPOs, we don't have a lot of info. That's the big downside. But the stock is putting in a very healthy candle here. All right. Definitely some sell pressure off the highs, but it's closing above all the recent resistance. Okay. Long-term target 79. You can see it up there. That's the first one. Okay. The other one I wanted to point out, YETI, which might not seem that big a deal to you guys, but YETI has been on a tear and it closed a weekly candle above its trend line. I'm not mentioning this as a swing trade or a day trade by any means. Again, this is a long-term play that you should keep an eye on, but very healthy volume, very healthy breakout, and it's signaling a move up to 90 bucks if it can hold. Okay, so larger time frames, we're still in the weekly, equal larger moves. And for YETI and Roblox, they're signaling larger moves, but should take at least a couple of months to pull that off. Okay. So day traders, swing traders, we're watching TIGR, Tesla, and ITRM. A couple more that we're looking at are Apple, just because it had such a huge Friday. And then Boeing. It's got a sneaky little chart there. But these are going to be the main focus for next week. And then for larger moves, look at Roblox and YETI. Okay, RBLX, YETI. All right, but hopefully this video helped you guys prep up for next week. That is basically what I'm looking at. And again, if you want to join us in the chat, just go to tradewithtex.com, click on the sign up button, and you can jump in for a free week. All right, but let's make some money together. Have a good week, folks.